the debt level in China is up 50% in terms of debt to GDP since 2009. So we have now a debt in China of something like 250% of GDP. These are official figures. Unofficially, probably it's much higher. And the problem today is really that the Chinese economy is slowing down massively, whereas it was still growing and accelerating after 2009.
It's not slowing down. It's 7.5%. It's stronger than we thought it was going to be.
Listen, do you know Stalin, who was a little Russian dictator? He said it doesn't matter who votes, it counts who counts the vote. And the same, it doesn't matter what the statistics say. It matters who publishes the statistics. Governments all lie. In Hong Kong, what is the inflation rate officially, and what is it in true facts? Mm-hmm. And when I tell you that we are doomed, for most people today, life is much more difficult than 20 years ago because the cost of living have gone up much more than their salaries. That is a fact.
What about the offshore bond space? Because, of course, Chinese companies that do go to the offshore bond space are going to be, stronger than the average company that's listed in the onshore space, just because they're able to go to the capital markets offshore.
Yes.
It's interesting, you speak to the likes of S&P, they say generally these companies are stronger that are listed offshore, but there's a company that they've highlighted, Renhe Commercial, which is bonds due next year. I'm not going to ask you to comment on this one specifically, but they've got around $900 million worth in the offshore market. This is a property developer. Looking forward, if a company like this potentially looks vulnerable, that could certainly rattle markets, don't you think, a company like that?
Yes, of course. The whole bond market globally is highly vulnerable. We have ultra-low interest rates on the 10-year Treasury note, which, by the way, I recommended to buy at the end of last year. At the time, it was yielding 3%. Now it's yielding 2.46%. How much lower will the rates go? Eventually, they spike, and junk bonds are at a historically low yield level. Emerging market debts are at a historically low level. The whole market has been distorted by Mr. Bernanke and Miss Yellen. Mm-hmm. But you don't believe it.